Well, it is Good News Friday, Monday. Good News Monday. And the normal situation is that I have Larry Goldberg here on Good News Monday. Hi, Larry.
Hey, Randy, how are you?
Everything's great. How about you? I seem to have lighting issues right now. Let me see if I can fix those a little bit. I have
Okay.
my new setup, Larry. It's only temporary, but I thought it'd be fun to have a fireside chat with you tonight.
Fireside chat. Sounds cozy.
It is actually, it's quite warm actually. Anyway, we this particular Monday night we can't do what we normally do on Monday night, which is to review the stock market and what happened to Tesla during the day, because of course it's Lincoln's or not, it was his President's Day, I guess now they call it. So we have President's Day getting in the way. And normally what I do is look at the week ahead, what's happening with the financials, any major earnings reports that are coming out, and what we think might happen with Tesla in the week ahead. And I thought, normally I just don't even invite you for this, Larry, but I thought, you know what? It might be fun to have you here for this as well.
Well, I'm here.
Okay, all right. Well, we're going to start with, as we do normally on Sunday night, I'm going to start with a little bit of Tesla news. And I think one of the big news stories right now is, of course, AI. I mean, it's the biggest story probably in the world, but it's certainly the biggest story in America, among financial institutions, among everybody. Everybody's got AI on the mind.
And not to mention that's an Nvidia earnings week, so
There
there's
you
that.
go. One more reason. Yes, indeed. And we'll talk about that in a minute in more depth. So, Tesla over the weekend, actually, Elon Musk personally mentioned the fact that, this Sora thing looks great. He didn't, I'm not, I'm saying it my own way. He didn't say it this way, but basically, hey, Sora, cool thing. But we were able to do exactly what Sora is doing a year ago, including the fact that it's generative video using input from video and with an output that takes into consideration physics. And those seem to be the two big things that Sora can do. So he said, look, we're compute constrained right now. So we decided we didn't want to use any computer capability that we're already constrained on in order to develop it as a engine or some kind of a new product. We needed it for FSD, but later this year, we won't be computer constrained anymore, and that will give us an opportunity to start looking at this as a product. So how did all that strike you, Larry?
I'm not sure he talked about it as a product. He definitely said that they would not be as compute constrained and they could broaden the scope. I mean, they demonstrated generative um, video back in the at the Investor Day.
Right.
At Investor Day, they showed how um, they were able to the car was not the car the training computer was able to generate uh, you know the car moving through the world on roads and you know generating its own video of a particular path through on roads. So it's
And fictional,
functionally
fictional things, fictional locations.
absolutely fictional. Yeah. So it's functionally similar to generative video, but it's not as much generative video from text as it is generative video from
Right.
original video sources, and then creating this generative, traffic. I think I think they actually did describe some degree of input instruction as well.
Well, they would have to have input instruction to say, make it look like, a 4-lane road instead of a 2-lane road, or put a center divider down the
Yeah,
middle. So
yeah,
whether that is put in as text or whether it's put in as
we don't know.
some kind of code, we don't know. But if it's being coded, it can be texted, I think.
Highly unlikely it was code
Right.
because the whole point was this whole thing is not
Right.
code driven. But, I mean, whether the instructions are textual or whether they're in some other representational form, it's representational input. I think so. It's not exactly the same, and it's not moving through the world in general. It is work in a very constrained environment, and that is to say, roads. But you can see that once it's generative, then it could certainly be generalized. I I think Elon's competitive juices have been fired up. But it's so important that they focus on FSD and conquer that world before they try and conquer all the other worlds. And whether it's the role of Tesla to do that or it's the role of X.ai to pursue that is an open question. I'm not sure what the value would be for. Oh, well, of course, the value for Tesla would be in the bot, to be able to give the bot, verbal instructions.
Right.
So that would be important, right?
Well, so then you have, of course, the convergence. And so what we see with what's happening right now is you've got AI capabilities now with the generative side of AI, which is what's the big deal in the last 14 months. Now that's been taken over to video as well as text. And then you take that and you converge it with the robotic capabilities. And this is where people are talking about, this massive breakthrough, because it's not just humanoid robots. It could be on any kind of a bot that you put this, from a stationary to something that's an existing appliance or a railroad, or it just go on and on and on in the places where this convergence could be helpful. But now you have, as this convergence happens, what I'm a little concerned about, is that for Elon's companies, the pieces of the convergence are spread around. So X.com has the content, and they're now experimenting with Grok and getting better and better at Grok.
Right.
X.ai is probably helping with how Grok is getting better and better, but they don't
Well,
have.
I think Grok is a product of X.ai.
Exactly. So, but I'm saying, but as it's now uh, has been deployed on X.com, X.com would obviously be making changes within that range, or maybe not. You think X.ai would have to make
I think, Randy, it's quite simple to think about it in another context. Think about OpenAI have developed GPT-4,
right,
soon to be GPT-5, GPT 4.5, whatever GPT X.X is, number it is. They have provided that product to Microsoft.
right,
Microsoft is embedding that product in multiple different Microsoft products and selling that to the customer.
right.
So X.ai is receiving payment from Microsoft. Microsoft's deploying the product into their
I'm sorry.
environment.
Yeah, it gets so confusing, all the new names. So,
Yeah, X.ai is providing it to
yes.
X, just the same way as
AI.
OpenAI is
Yes.
providing it to Microsoft.
Right.
So they're obviously, a licensing agreement. And remember one thing, X.ai is using X as a data input.
Right.
So there has to be, some kind of cross licensing arrangement, which is not unusual. It's highly usual. And in fact, when you think about rolling out, say, GPT 4.5, and I happen to be party to some of these arrangements in some companies, but OpenAI will license a company to use the product. That company will take that product and will add data to maybe a vector database and or some other tool that GPT-4 or 4.5 will add to its context window or to its training database.
Sure.
Hopefully, they'll allow that as well. And then it'll improve that product for that particular company's usage. So that company will be using OpenAI's product on a license basis, but will be adding their own layer of intelligence to the top of that, and that's their proprietary stuff. I think you've got the same situation between X.ai and X.com.
Right.
Make sense?
So ultimately, though, between the three companies, they have the text data, they have the vision data for cars. They're obviously going to be already developing the vision data for the robot, which needs to be as complete as anybody's vision data is going to be.
Yeah.
They've got the compute at Tesla and driving that compute to the moon. Then they've got the ability to do the video at Tesla and the ability to do the text at X.ai. Between the three
and
companies,
video, they will be adding. Look, they've already added video to X.ai, but they will be using that video for training in a much broader, a more generalized basis than the video for training is being used at Tesla, which is purely driving, right? And or the robot, which is purely the robot's tasks and moving through the world, but you'll also have the text from X.
and it's of course possible that Tesla would develop may have already developed a text processor as well, generative processor as well.
I doubt very much that Tesla doing generative from text at this point,
because they can go ahead and get it from X.ai.
Yeah, because I mean they don't have they don't have the bulk of the text inputs. They don't
Right.
have the wherewithal to, and I'm not sure that they need it now. Do they have some code that takes driving instructions and turns that into video? Yeah, possibly,
Yeah.
but that's a very restricted or limited amount of function that they need.
So anyway, I guess the real takeaway from this, as we're saying it out loud and talking about it, Larry, is between the three companies, you could say that they are in a huge leadership position in terms of their combination of resources. It's all about data, compute, and capabilities, apps.
Right, right. I think that they're in a very strong position. I think they are one of the leaders. It's pretty clear, though, that OpenAI are in a very, very strong position right now. Who's winning this? I don't think it's a one. I don't think it's a one-horse race. I don't think it's even one race. I think there are so many ways that this can go that we're far from, quote, a race yet.
Right.
If you want a race, there's a race in hardware. And in that race, it looks like Nvidia are way ahead of the pack. And even if you look at the hardware that, I'm not talking about inference hardware, I'm talking about training hardware. If you look at the hardware that Tesla are producing, I mean, Elon has been very clear that it's only a secondary option. It's not clear that it's a primary option yet.
Right.
Because right now the winner and the leader of the pack by far
Is Nvidia.
is Nvidia.
Yeah. Yeah. One other subject on Tesla today, I'm wondering what you thought about Elon's statement today that 20 million by 2030 is still possible. He says it's going to be a hard job, but still possible. So is he, again, just his optimism, or he's been so right? He didn't make a promise, but he's been so right on his numbers for automobile production since 2016. He's been right.
2014, actually.
2014, he's been right.
In 2014, he predicted a 500,000 by 2020. So it was quite remarkable.
Right.
And people were very tough on him about that for a long time. Yeah, I see 20 million as being possible, but I think he's right. I think it's on the outer edges or the fringe edges of probability. But look, they've been on the fringe edges of probability for some time. I think somebody in Tesla Q published that it's never happened that a complex product has reached half a million. Where they got that from, I don't know. But you know, it they made it happen. They got to 500,000, within 5 years, and they fooled the world. Well, actually, wrong. I think they were short by 45 cars at
Yeah, right.
5 million of the 500,000.
Right. Yes, exactly. Well, anyway, it was interesting to have him reconfirm at least the possibility of that number. And I think I think it at least forces everybody to take another look at it because of his background, his history of being so correct on these kind of things. I think people that are saying 8 million or 6.5 really have to at least go back and put the numbers together again and see if they think that maybe it is within the potential that they need to put on their spreadsheet.
Look, forecasting is very, very, very difficult. And and Elon has forecasted incorrectly as well. He can be a little bit, he can get a little bit, out there. I mean, he's often right, but he's often late.
Yeah, yeah.
So we'll have to see. I do think, though, that when the Model Next Gen, or the Next Gen platform reaches volume capacity, I think it has the capacity of building sufficient on that platform to get to, the high double-digit millions.
Right.
And how high, a lot depends on how successful that design is. So until we actually see the design, understand the specs, and it rolls out, and we get some idea of cost based upon its initial selling price, only time will tell.
Right, right. Okay, let's look at the general economy then. First up on the reporting this week is LEI, are the leading economic indicators. And last month, you and I talked about the leading economic indicators as something that in our history, we paid so much attention to in years past. And of late, it seems like you don't see anybody barely reporting on the leading economic indicators. But I wanted to review what they said last month, because it comes out tomorrow. And last month, they said, this is what they said on their website, that the indicator fell by 0.1% in December of 2023 to 103.1, with 2016 being 100. This is following a 0.5% decline in November. The LEI contracted by 2.9% over the previous 6-month period between June and December, a smaller decrease than the 4.3% contraction over the previous 6 months. So basically, the LEI has been going down, 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 down for over a year. It's projected tomorrow to go down 0.3, let me double check that. Yeah, 0.3%. So now we'd be talking about, I think, 14 or 15 months of the leading economic indicators being down. I know that you've got your projection of 100% likelihood of a recession by second quarter. How does this help you with your, certainly?
It's frightening that it may win my bet for me. I remain very bleak. Some of the numbers are very good. Employment looks good on the surface of it. When you dig down, maybe it's not so good. And so maybe this is, the leading economic indicators may be very biased towards the middle market businesses and individual owned businesses, and that may be skewing it, because I think people are feeling it tough, and the S&P are not doing great under the Magnificent Seven or Magnificent Six or the whatever the top guys, but this is part of this, this unique situation we're in the economy. We've got like multiple things going on, and we've got this recession already occurring in some elements of the economy while others are doing great. It's really hard to figure out what's going on. But I will tell you one thing. The United States is leading the world in terms of economic performance,
Oh yeah.
undoubtedly.
Oh yeah.
And you know, China was supposed to overtake us 5 years ago or 10 years ago, and China stalled for the last decade. China stalled badly, not a little, but a lot. And 10 years ago, it was only a matter of time before they overtook us, just as Japan was supposed to overtake us in the 80s. And then Brazil, when we had the global financial crisis, Brazil was going to be the next big, country. And we just blew them all away.
Yeah.
Just blew them all away for all the trouble we've got, for all the, political ruckus in the country. So recession or no recession, the United States remains a very vibrant economy.
It's true. It's true. Well, on Tuesday, that's the only thing taking place is the U.S. leading economic indicators. Then on Wednesday, we have Fed Day. So, and we also have, as you pointed out, the earnings from Nvidia. So it's going to be a pretty interesting day. So the Fed minutes come out at 11 o'clock California time, 2 o'clock Eastern. But before that, we'll have Atlanta Fed President Raphael Bostic talking, and then Fed Governor Michelle Bowman speaking. And I assume they know what's in the minutes. So, because they were there. So their comments might give us some predictive capability, maybe not. Since
They're awfully careful to avoid trying,
yeah, I mean, they can't,
the
yeah,
minutes.
they're not going to, yeah. But I'm just saying, they know what's in them. So they can't say something that's counter.
Yeah, that's true.
So it'll be an interesting day. And I don't, usually the minutes don't really drive the markets too nuts, but boy, this was a tough meeting, this last one, where they took March off the table. So the minutes might give some hints, and some people are even talking about another increase now. What do you think, Larry?
No.
No.
I mean, come on. Why would they increase it again? I mean, we haven't seen an uptick yet in inflation. I don't think inflation's upticked. Do you? I mean,
No, no, not at all. No, not at all.
so why would they increase it?
They have this worry. They are such worrywarts. They want to see that inflation path longer now. They want to make sure that it's solid. Like we talked about last time, they really moved the goalposts. I mean, they really moved the goalposts from, oh, we need to see it for 6 months in PCE, and all of a sudden is, well, we want to see it longer. It was really a big time specific statement change.
Yeah. I think if there were a precipitous drop of 0.2, or that they would ease up on that conversation. But this is the way inflation works. It's very sticky. I was just reading the histories for various reasons. I was reading the histories of previous Fed governors, chairman, just at the time Volcker was appointed. There was this guy. There were, such idiots before them, and I don't see what their concern is, because I think we're moving in the right path, and we're moving at the inflation rate. It's very hard to get the inflation rate down by, large amounts in a very small period of time.
Sure.
But once you have a direction established, it's very seldom changes on a dime.
Right, right. Oh, yeah. I mean, again, they use the example of the 70s, but that example is complete. I mean, yes, this is also an unusual situation, but the whole oil thing was so crazy at that point.
Quite apart from the oil thing, you have to look back at the history of how long they kept rates at an aggressive level. It went on for years, not months, but for years.
Yeah.
And they were absolutely fixated on not reducing the interest rate. So when you have that going on for that long a time, you build a huge upward pressure, huge upward pressure over time. So even when you start cutting interest rate, start increasing interest rates and cutting the money supply, it takes forever to change that direction.
Because of the very thing that the Fed President Powell talks about, which is the
Yeah,
expectations of future inflation, which is the part that drives business people crazy as well as consumers crazy.
right.
Because I can remember borrowing money at 12%, 13% because inflation was at 18. Why wouldn't I go out and buy that coffee table now rather than wait? Because I'm going to be able to pay it back with cheap money. And so those expectations go through the entire economy. Well, on Thursday, then, Larry, we get the initial jobless claims. It's been in such a flat territory for a very, very long time, but inching up ever so much. They're expecting it to be a little higher this week at 216 compared to 212. But that's still right in the exact range of where it has been. Any thoughts on that? Maybe just that's
Yeah, it's such an unfortunate number to follow because it's hard to predict accurately, and it can take swings and up or down and be adjusted like a
next.
month later and say, sorry, never mind. So I don't trust this unemployment indicator at all. I think that it's a made up number, and it's made up in such an unpredictable form that, I think it's been the most corrected number of all economic reporting.
The employment
Um,
numbers? Oh, yeah, easily.
yeah.
Yeah.
And so when they come out with a number, I just say, well, let's see, even though it does drive markets, which
Right.
is strange.
Yes. So then we also have that morning, we have the S&P Flash U.S. Services Purchasing Managers Index and the Manufacturing Purchasing Managers Index. They're expecting the services to actually go down by a very small amount from 52.5 to 52.4, but they're expecting the Manufacturing Purchasing Managers Index to drop even more from 50.7 to 50.1. So we're starting to see real evidence of, again, Powell did mention this, two economies. You've said this. We have two economies specifically with regard to services versus manufacturing.
Right.
And the manufacturing sector is just getting walloped.
Very
Um,
tough. Very, very tough.
very tough. And they're suggesting it's going to get worse. So if services ever also takes a hit, or if manufacturing can't find a way to pick back up again, at some point, your estimate has to come true. I'm still on I have to say, Larry, I'm still at 50-50 on the third quarter. I can't come off of that. I haven't seen anything that's made me want to move, although we'll get to a report in a minute that might cause both of us to reconsider some of our thinking. But so we'll see what happens with those. And existing home sales, they're expecting to go up because there was an awful lot of activity in December and January out of season. So they're expecting to go from 3.8 to 3.97 million. Shocking for this time of year, but it looks like it might have slowed down, even though the mortgages are still under 7%. So I'm not sure how this is going to play out over the next couple of months.
Yeah, well, I mean, I don't know what's driving any activity in the real estate market right now, given current mortgage rates. Maybe people just have to make a move. I don't know what drives that. But new auto sales dropped precipitously in the last couple of months, and I don't think we've seen that work through the numbers yet. But the drop has been very, very dramatic, and so I think we're going to see that start being reported on. So I do think that we are looking at, a significant slowdown. We'll see.
All right. And then also on Thursday, five, count them, five Fed speakers. So nothing could go wrong with
There'll be
that.
something for everybody.
And then on Friday, there's absolutely nothing. So Nvidia, Larry, very high expectations, very high expectations. Bank of America says they wouldn't be at all surprised to see Nvidia hit really good numbers and still go down 10%.
You know, I held Nvidia for a very long time. And around 20, around the pandemic, you know, early in the pandemic, I started clearing out my, I think 12 or 15 stocks that I'd held forever. Disney, Nvidia, what was the gaming company? I just like 10 or 12 stocks that I'd held for a long time. So you know, I was the fool. I should have held on to those Nvidia stocks, you know.
The Disney was a good move. See, so you're
Yeah, and eventually I included Amazon in that. And Amazon I'd held since before 2000, 1996 or 1998, I forget which. So, you know, actually, all of those stocks that I sold ultimately did well. They went through a gyration through the pandemic, but you know, I kind of cleared myself out because at the time I was retiring, and you know, that it just seemed to be a bad time coming for stocks. But and I'd done so well out of Nvidia over the years, and it had been up and down. But you know, I hadn't looked at it for years, and when I sold it, I'd done pretty well on it. So obviously, I'm having FOMO about because I realized just how much money I missed out on. But now is not the time to buy Nvidia, and if you're holding it, it's certainly not the time to sell it. So who knows? I mean, I think it's going to do well. I think it's going to go up, but you know, they could have had a production thing, or they could have had they're so well priced that they're going to have to perform really, really well. I mean, which people expect them to do to go up. It's one of those moments. If you own them, hold them. If you don't own them, I don't know.
and that is not investment advice. It is Larry's theory of investing for himself.
That's
Okay.
right.
All right.
That's how I roll.
So last week, Larry, I missed it. I don't know how, because it's one of my favorite reports, and I'm going to just take a minute to explain why. Most people do not recognize that most of the jobs in the United States are the employer is a small business. It is
Right.
not Amazon and Tesla, et cetera, and Ford and General Motors. It is small businesses across America. They own the bulk of, or have the bulk of the employees, and they create the bulk of the economic activity in the country. And a lot of those companies are the service businesses that we're talking about right now. But listen to this, the National Federation of Independent Businesses monthly sentiment index fell last month in January by 2 points. The largest decrease since December of 22. It fell to 89.9 from 91.9. That is a massive drop.
It's a massive drop.
The drop follows would have been the index's first increase in 5 months. So it had been dropping and dropping and dropping. Then last month in December, it went up a little bit, but it kept up. Now it's now back below its 50-year average of 98 for the 25th straight month. So here were some of the concerns of the business people. Labor quality continues to be their number one thing.
Yeah.
Inflation is their number two thing, even now. As costs increase, sales conditions have tightened, with the share of the owners reporting profit growth falling to a net negative 30% from the net negative 25% in December, the report said. So in other words, if 60% are profitable, I mean, if 30% are profitable and 60% are not, that would be a net negative 30%.
But
So,
you know what that means for a small business owner when you suffer such a drop?
yeah,
It means that the food may not be bought on the table. That's just
exactly.
where it goes. I mean, It's pretty serious.
Yeah, yep. It went on to say NFIB's chief economic consultant, Bill Dunkelberg, said in January, optimism among small business owners dropped as inflation remains a key obstacle on Main Street. On a 6-month basis, the portion of owners expecting better business conditions fell 2 points to a negative 38%. And the share of owners who expect higher real sales fell 12% to a negative 16% in January. So all of that does not sound very good. There was these other major findings. Then we can talk about the whole thing. Number one, or interrupt me if any one of these you want to talk about specifically. The frequency of reports of positive profit trends was a net negative 30%, 5 points worse in December, and a very poor reading. 25% of owners reported that inflation was their single most important problem in operating their business, down 3 points, and 1 point behind labor quality as the top problem. Small business owners' plans to fill open positions softened, with a seasonally adjusted net 14% planning to create new jobs in the next 3 months, down 2 points from December and the lowest since May of 2020. 39% seasonally adjusted of all owners reported job openings they could not fill in the current period, down 1 point from December and the lowest reading since 2021. And 3% of owners, this was the really shocker to me. We talked about this last month, Larry, but it continues to be true. Only 3% of owners reported that they had borrowing needs that were not satisfied. Last month, it was 2%. It went up, but it's still only 3%. 62% said they're not even interested in a loan. So
That's pretty high for small business. I mean, small business has morphed its borrowing focus from banks to alternative financing means, right? And including credit cards. But it's not a good sign when small businesses have got such low confidence. Where is all that money that was sitting on the sidelines? Where has it gone? It probably was never ever really there. I don't know.
I'll throw out a theory, Larry. And I have had 400 small business clients that I've worked with over the last 16 years, and I still have three, even though my main income is now from these YouTube channels. I really, really feel like I know the small business folks. What I've seen is, number one, they've aged. When I started in business back in the 70s, it was a bunch of young people. There was a lot of people that were under 30, under 35 that were starting businesses and had new businesses and very risk-oriented, taking lots of risks, going broke, starting over again. A lot of young people, all the baby boomers were, out there starting new businesses. Well, fast forward 40 or 50 years, and what you now have is a bunch of 55-year-olds running businesses. They've got their money in the bank. Their spouse is employed. Their spouse has got a pension. Their spouse has got medical. So their income that they need from their small business is hardly anything. And they've got money in the bank, and they can finance their own receivables, finance their own payables, finance their inventory. They don't need the bank. If they do get in trouble, they can always tap the pension or tap their home. The home is probably paid for, because people that age category, 40% of them own their own homes outright. So I think what it is a lot to do with this demographic shift. Not a lot of young people out there making big bets, and a lot of older folks that have solved it. They don't need it anymore.
It's a very interesting observation. Yeah, I mean, we're seeing the heart of the baby boomers moving into retirement now. I was the cutting edge of the baby boomers. I was born in 46. Now you're getting, and so I retired, some years ago, and then started a new business after my initial retirement, and then became very active again. I think you're seeing, I think we're in the heart of the baby boom retirement period now, right?
Yeah.
And so that's a very acute observation. I think you're onto something there. Just don't need that money, don't need to borrow it from a primary banking source.
And you're not going to take risks at this age, Larry.
Yeah, that's
I have
right.
I've started 5 businesses since I turned 70. Okay. I turned 5 different businesses. This YouTube channel, the latest one. In,
Riskless.
in none of those businesses was there any risk.
Mm.
I once on one of those businesses, I spent $10,000 for some training, and I thought my wife was going to have a fit. $10,000, Larry. It's like nothing compared to the 100,000 I might have risked, when I was in my 30s. So it's a whole different kind of mindset when you're 50, 60, 70 than it is when you're in your 30s and can take those big, big chances.
Well, you may be right. So, one last little piece of late breaking news. Adam Jonas put out a paper today from Morgan Stanley,
Oh,
and he says that they did a poll of Tesla investors, and they say bears outnumber bulls by 2 to 1.
wow.
And he asked this fascinating question: can bearish be bullish?
Can be.
So much bearish sentiment. Maybe this is I mean, that's been my thesis for some time
Right,
now.
right.
And this is a really good time to be a bull.
Now, when he was taking that poll, was that among major investors or was that among retail investors or both?
It's about major investors. I mean, Morgan Stanley's investment community is not, the average small size
Yes, yes,
investor. So they would be, fairly significant investors, institutions,
right.
um, you know, private funds, family offices,
Well,
investment community members. Yeah.
and
I mean,
go ahead. Okay, so when you say bearish can be bullish, part of that is if the stock is at this level with that many people bearish, then we may be looking at the bottom.
that's really what he's saying, is that if that there's so much bearish sentiment, this is a really good time for the stock if you believe that, there's a great future. Look, I've said it all along, and I said it when we looked at 2024, I said 2024 is going to be a tough year for Tesla. Elon told us that as
Yeah,
well, but 2025 is, that's going to be the period of takeoff. So between now and mid of 2025, there's great pickings. And, if you dollar cost average, not investment advice, but if you dollar cost average across this period, you're going to look pretty good.
I couldn't agree more. I think you're 100% right on that one. So we have the bonds right now, Larry. We've got the 10-year is up 1.8 basis points. And it looks like the 2-year is actually down a half a basis point. The inversion closing, at least for a second.
By a very, very, very minimal amount.
Right. But anyway, at least it's in the right direction for a minute. So let's see. We've got oil. By the way, I did do a little extra research on oil today. It turns out that the Red Sea situation is not affecting oil tankerage that much. So I didn't read all the reasons why, but it's affecting regular container passage, but the oil tank,
Not Chinese containers, though.
but not Chinese containers. So it's affecting containers, and container prices have gone up, but the price has not gone up on tankers. And my guess would be is because where the oil is produced and where it needs to go, you can kind of change that around, and you don't necessarily have to go through that route or go all the way around the Cape to get where you're going. So you can like I used to sometimes I always got my freight into the West Coast ports, but when we had a West Coast dock strike, I could go to, or if I got a Los Angeles dock strike, I could go to Vancouver or I could go to Cancun. Or if I had an entire West Coast dock strike, I could go to New Orleans or go to the East Coast and then train it across. So I think that's what's probably happening with the oil is there's more choices.
I'm a little skeptical of that. I think there's just not a lot of Western countries that put oil tankers through the Suez Canal. So, this Houthi thing is very focused on Western co countries and on countries that are allied with Israel. So many of the tankers are now owned by Arab interests and by Chinese interests. And these are countries that are immune from these attacks, not immune in the military sense,
Yes, yes.
but immune in the political sense. So maybe that's the reason.
Could be, could be. So anyway, oil though is sitting at 79 right now. So that is the highest in about 3 months.
Yeah, we didn't expect it to go that high. And that,
No, I didn't expect it to get this high, but it is a little
yeah.
bit down in the pre-market. Natural gas, actually, it must have popped up to somewhere over the weekend, and now it's down again, down 3.29 in the pre-market, but it's at 155, which is up a little from where it was on Friday. But natural gas, of course, remains way, way, way down. Gold, you could call it unchanged at 2027. Copper down 0.73, sitting at 3.81. Still kind of same.
Copper's been on a downward trend for a while now. And, the rest of the world is in recession. We're not, but I think we're about to get into one. We can't be immune. I keep singing this song. One day it'll be true.
Well, so you now have China, which is the #2 economy in the world, clearly in recession, even if they haven't finally said it, but they are. You've got now Germany has passed Japan as the #2 country in the world, and it is not stated yet, but it appears to be. You've got Japan, which is #3. They have stated they're in recession, and you've got the United Kingdom, which I'm not sure where they are right now in the top 10, but I know they're in the top 10. I just don't know which one, and they've stated they're in recession. So you've got a pretty substantial part of the rest of the world in recession at this point.
Yeah. Yeah.
All right.
I think we're going to be in recession. Anyway.
Yep. Okay. Bitcoin is at 51,793, up 60 over the course of today. And you've got the Dow. Here we go with the equities. The Dow's up 57 or 0.15%. S&P up 4.75, 0.09%. NASDAQ up. Did I say up on any of those? Those were both. Yeah. I am very sorry. The Dow is down 57. I'm sorry.
That's a big difference.
That's a big difference. Down 57.15. S&P down 4.25. And the NASDAQ, though, basically even, up 4.75, 0.03%. So it doesn't tell us a lot about tomorrow, except the Dow is down at 38,641. Thoughts about the equities, Larry?
It's not really. I mean, I didn't see any real serious movement. Are not great times for stocks in general. Other than Tesla, I'm not looking very hard at acquisition. I'm waiting for the economy to declare itself.
Yeah.
And I'm really worried about the war in Europe. I think it's a serious situation. And we'll see. We'll see.
Yeah. All right. And Tesla next week, continuing to sneak up here and there, or
no, I think it's going to be, to my knowledge, there's not any big news.
Right.
So I'll see. I don't know. I don't foresee any upside for Tesla. I don't see any particular downside other than, people will come out with news about rust on the Cybertruck. They'll come out with, it's just incredible what they'll come out with.
That's true. It's true. Well, Larry, as always, thank you for co-hosting on Monday night and bringing us some good cheer. and some good news, because we did have lots of good news in there, even if you continue, and I continue to believe that we might have to go through a rough patch here with regard to both Tesla and the economy, but that on the other side of that, it's going to be spring again.
Randy, rough patches are opportunities in disguise. It's only in rough patches that one makes moves that are really of consequence.
Right.
It's not always true. I mean, you get an Nvidia pop, amazing job that they did and so on and so forth. But in general terms, bad times are often very best times for investment.
Absolutely. Absolutely. All right, Larry, thanks a bunch. And all of you out there, it's been great talking to you.